Now, like it, they do not. Investors have given the newly married Facebook founder an unwelcome wedding present. Mark Zuckerberg, who married the day after floating his social media company, has seen his personal fortune fall by more than £1 billion. Shares in the company fell as much as 12% at one point today, the first trading day since Friday's flotation. Well, I'm joined by our technology correspondent, Benjamin Cohen, now. So what has been happening at Facebook, then?
Well, look, Facebook debuted on Friday, and everyone assumed it would have the classical internet story of the share price rocketing up straight away. Some people were so convinced in Germany that they paid $70 for each Facebook share, even though it was being sold in New York at $38. And now, the share price did briefly rise to $45 on Friday, but then it's more or less sunk since. So let's have a look at how Facebook's performed and compare it to other companies. Outside Facebook's offices, they normally have a big sign with a thumbs up, but it's thumbs down really to Facebook on the market, down 24% of its peak on Friday. Zynga, which makes games for Facebook like Farmville and Cityville, is worth less than half of what it was last year. Groupon, which sells discount coupons that are distributed on Facebook and Twitter, is actually worth nearly a third of what it was last November. The only social media company with a thumbs up is LinkedIn, which is worth more than double what it was when it floated on the stock market last year. LinkedIn, unlike Facebook, charges for some of the services that its users use.
So what conclusions do you draw from all of this, then?
Well, look, there's been a real lack of investor confidence in Facebook. A lot of people who had shares in the company sold as soon as they had an opportunity to. And the banks today have had to really keep buying Facebook stock to keep the share price up. There's been a real lack of public appetite to be shareholders in the service that they helped create. When Google floated quite a while ago, lots of its users bought shares because they worked out how Google made money from the adverts linked to search results. So really now, when you think about it as a Facebook user, your data isn't just owned by this cool company that's in Palo Alto, it's by the big banks in Wall Street, and that makes people have a different perception of the company. And it really, though, even when we look at Facebook's value today, it's still worth nearly 90 times its profit, which is quite a lot of money for any internet company. So when we look in the conclusion, we could say, well, it's a bit of a thumbs up for Facebook. They've got $16 billion out of floating. Thumbs down for the investors who've lost a lot of money in just a day.
Ben, thanks for that.